Hello and welcome back. Make Money Count. This is for sure going to be the last show of 2023. Our last show that we did, we were talking about what our predictions were for 2024. And I said that I think we're going to see rates drop. I think we're going to see them drop kind of like Q2. So June of 2024, we'll start seeing rates come off. I think that we may not have seen kind of the lowest print on housing prices in Canada yet. I think we may still see a little more downward pressure on housing prices, but I think that at the end of 2024, housing prices will be higher than they are today. That's because I think we're going to see 1 percentage point come off the Bank of Canada rate between June and December of 2024. There are obviously other views out there, believe it or not, and they range. That's why we wanted to do this show today, to talk a little bit about some of the range of ideas and expectations for 2024. For example, TD Bank believes that we're going to see the overnight rate, therefore the prime rate, drop by almost 3% by 2025. That's a lot more. By the end of 2024, 2.75%. Prime rate's 7.2 right now. It's like a 4.5% prime rate. And then there are other schools of thought. I read an article about a hedge fund manager out of the States. I liked a lot of what I was reading about. He called the October 2023 drop in bond yields or run up in bond prices. Remember the way that bonds work? The price of a bond increases and its yield decreases. So as people see that interest rates in the future are going to be lower, the price of a bond increases and the yield drops. That's how the market behaves. So a bullish run for bonds means that the yields on bonds are contracting, which means that your mortgage rate is going to drop in the future. Just put that in there. This fund manager out of the States, he properly called the October 2023 bull run on bond prices. And he says that 2024 isn't going to be what everyone expects. He thinks that we kind of pretty much hit the low print on bonds. That would mean the Fed is going to hold a little firmer on interest rates. The market is not going to see a continued bull run on bonds. So yields are going to stay relatively close to where they are right now. He says they may tick a little higher. They may come off a little bit, but they're going to be range bound pretty close to where they are right now. And that will lead to not a soft landing for the United States. So soft landing is kind of generally anticipated and expected right now in the United States, right? All the big guys are calling for it. So all the big banks, similar to TD in the States, are calling for big rate reductions. Remember, the only stakeholder that isn't are the central banks themselves. The Federal Reserve is kind of continuing to be a little bit tough on rates and inflation. The Bank of Canada, for sure, is still being tough on rates and inflation. So you've got these market strategists, hedge fund guys, and some economists, frankly, that are calling for more tough time ahead because of what the central banks are saying. And then you've got these economists at the big banks that are telling us we're going to see what's expected. The market is pricing it in. The market is expecting it. 1 to 1.5% drop in rates. You saw that TD report, Matt will put it up, 2.75 percentage points off by 2025. These are big numbers, big drops. The real estate market is going to behave in lockstep with rates. The longer interest rates stay higher, the less money the economy has to buy real estate, so that when interest rates do come off, the demand will likely not be as strong. The longer we maintain higher interest rates, the softer we're going to make the demand for housing when the interest rates drop again. So if we maintain really high interest rates for an extended period of time, we risk really affecting the buyer that may come back into the market, delaying the rebound in housing that everyone's kind of expecting. That's a bit of a caveat, I would say now. If we're thinking about 2024, and beyond, we could see a point to a 1.5 off of rates, a rebound in the housing market by the fall. That's kind of what I think is going to happen. We could also see interest rates staying high. So we could see the Bank of Canada only carving 50 basis points off. The market kind of continuing to trade sideways into 2025, then perhaps further drops in the prime rate that may bring the buyer back. There's another theory where we see really significant drops in interest rates in 2024. The economy comes rearing back. people start buying real estate again like crazy. Consumers start spending money. Employment goes back to where it was and inflation comes back. And then maybe it's not so transient anymore and it starts sticking into our economy. And then we have to hike rates again. But we're so scared that it's going to come back that we leave rates higher and we leave them higher for longer so that we kill inflation, but we kill the consumer. Rates are higher for longer and asset prices really drop this time. What we're going through right now is kind of just the first and second inning of a longer process. Leverage just gets sucked out of the market and asset prices drop. And that could be kind of scary. Again, like that is, if you go down a rabbit hole on the internet, we've got to be careful with where we're at right now. I think that usually these things end up being about the middle of the road and ends up what generally will happen if you're trying to chart a course for 2024. Sit back a little bit for the first 6 months, continue to do what you're doing. Don't overspend. Don't make any massive decisions. If you're looking for real estate, it might not be a bad time to buy something because we're pretty sure that in June, interest rates are going to come off. And by the time interest rates are coming off, the shine's going to start coming back into the real estate market and housing prices are going to come up. Everybody that's got a dog in the race for real estate prices, Royal LePage and Remax and Treb and Oria and the Canadian Real Estate Association are all expecting price increases and an increase in activity in 2024. And they vary. Everyone's expecting an increase. I mean, it's not hard to increase over what 2023 was. I just think that we should be a little bit cautious because January 1st is not just like an automatic magic date where everything changes and the economy turns on a dime. If we've learned anything, we know that this period of time has lasted a little while and it's not just magically going to stop because the calendar changed. 2024, we're still in for a little bit of a rough ride. We still have a central bank that's intent on fighting inflation. We still have a consumer that continues to get beaten up. We have a housing market where no transactions are happening. Then we got all this like government mumbo jumbo talk about increasing housing supply and they're pushing in more immigrants, and then there's government spending. There's a lot of variables at play here right now. My advice is let's just kind of cut through all the bullshit. Let's simplify what we're looking at. Let's consider how interest rates affect housing. What do we think interest rates are going to do in 2024 and make our decision based on that? If you're sitting in a fixed rate mortgage right now, ride it out. If you need some money on top of it, you probably want a second or a home equity loan. We actually did a really good podcast on that. 5 ways to access the equity in your home. Check that out. But chill. 2024 is not going to be much different from 2023. Hopefully by the end of it, we start seeing a little bit more activity and all the real estate agents can get a little bit happier because there's more transactions happening. Remember, if you're enjoying our content, please hit like or subscribe. I have to tell you that because Matt, our show producer, every single time we start filming one of these shows says, tell everyone to like and subscribe. So there you go.